Hello traders and welcome to the weekend edition. My name's Dez here at Grok Trade, senior analyst and also your potential future mentor. This video is good through October 9th, which is a Sunday, 2011. To all you Stock Picks V newsletter subscribers and 201 subscribers, I have a special note for you at the end of this video, but let's get talking about technical analysis right now. On Friday, the markets closed in bearish territory, but I wanted to show you something. The Russell's here closes down 2.6%. Everything else, not too bad. NASDAQ, but anytime you get the NASDAQ and Russell's leading the charge to the downside, that's usually bad news going into the future because they can be leading indicators. All right, furthermore, go down here to the banks. The banks were off a whopping 4% on Friday. That's like pulling the rug out from underneath the markets as a whole. Gold down, US dollar up slightly, crude oil up slightly, but a major sell-off in transportation index really hurting the Dow. All right, now with this is a big video. We really get into the technicals on the daily, weekly, and monthly. We're looking at the S&P. I talked about the three white soldiers. It did not come to fruition. Let me show you something here. Technically speaking, the open on candlestick number 2 on a three white soldier should happen within the body, but above the halfway mark. It has to be above this halfway mark going to the high. But if you zoom in really close, it actually was a gap up here. Do you see this? So this opening did not happen within the body of this first candlestick. It opened up above. Same thing for the third candlestick. So technically speaking, as far as textbooks are concerned, this is not a traditional three white soldier pattern. And sure enough, on Friday, we did go higher, but we came back down, actually closing lower than the 20 simple day moving average. And we have what's called a bearish Harami type reversal pattern, and also a bearish thrusting type pattern. So if we make a lower low on Monday, lower than 1150, 1150 is what we're looking at. If we go lower than that, that will confirm another down leg, and the question is, how far will it go? Now let's go to a weekly chart on the S&P. The weekly chart is we did break down, down. We rallied back at the end of the week, and we did close above the 200-week moving average. That's this big red line coming across here. So now we have this hammer. But a hammer doesn't matter inside a bunch of consolidated candlesticks. But what does matter is that the bears try to bring it down. The bulls yanked it back up. There was no follow through to the downside. All right, let's go to the monthly chart. On the monthly chart, we do have a nice hammer. Now, the month, we're at just the beginning of the month, so we could be at the high end here of the candlestick. So the rest of the month could bleed out and be really a big red one. So don't get too excited about this hammer yet, because we're just getting started. But if the month ended like that, that would be a nice bullish reversal pattern in the making. Now let's go over here to the NASDAQ. Actually, I'm going to go to the Dow first. The Dow, same thing, nice pullback. We do have a hammer, but it's the beginning of the month. Don't pay too much attention to it. Now the week has closed. Here, we're above the 200 and we're above the 50-week moving average on the Dow. We're back within this consolidation, but still lower than the trend line. The question is will this continue to act as resistance and when we drop? But we are caught up in all these moving averages. That's bad news. We need to get either below them to be bearish or above them to be bullish, but we're caught up right in the middle of them. So on the daily chart, we had this nice big gnarly bear flag drop, bear flag. We go into kind of a triangle right here. Support is broken, now acts as resistance. We drop, we rally back. Now we have a spinning top. The 50-day moving average acting as resistance. The or the 20-day moving average acting as support. Now here's a little tip for you. This is more advanced technical analysis, but anytime a candlestick starts to get pinched between the 50 and the 20, like this one is on the Friday close, this can prove to be very volatile in the next candlestick. You might get a second candlestick or even a third within those two bands right there, but expect high volatility to increase either to the upside or downside if because of what we're seeing here. Now on the NASDAQ, we have the big triangle. It's a descending triangle. We're still in this big descending triangle with the blue lines. We go into a rising wedge type pattern with the red lines. We drop down, we come up, we hit the head of the falling trend line that we have here, acts as resistance. We break down through support. That's the red line here. We bust support, we find support here at this support level. We rally back up, and we hit our head. Do you see this? Now we have a bearish thrusting pattern, and we have found resistance at the falling or the declining 50-day moving average and the declining 20-day moving average, both acting as resistance, and it has dropped. So this has a large downside potential right now here in the markets. If I go to the weekly chart, what's interesting here is we're above most moving averages. However, we do have the 67 week. It's the 67-week moving average that we are still below, and below this resistance line. So we're just choppy within the confines of this consolidation. So it's really at a point of indecision. What I don't like, or what is more bearish, is that it dropped and consolidated on the low. It's not consolidating at a high, it's consolidating on a low, so that's pretty bearish. And if we look here at the monthly, again, don't put too much time into this, but it's drop, and that's the candlestick that we have right now. As far as the Russells is concerned, here's the monthly, but let's go to the weekly. This is closed. What's interesting here is we're below almost all major moving averages and barely above the 200-week moving average. Do you see this? So we have the leading indicators, the Russell and the NASDAQ, but the Russell in this case showing relative weakness, just like we saw on Friday. It took a huge hit compared to the other indices. So this looks quite a bit weaker to me. On Friday, here it is, we have this nice channel. We come up, we poke our head above a trend line on Thursday, but it did not hold any water. We get this bearish engulfing type pattern right here. We do have a little support coming up. The question is, will it start breaking down? Well, something I like to do is bring in the banks to take a look at the banks. Banks choppy, pop. The 50-day moving average acting as resistance, a huge bearish engulfing pattern. We have a crossover on the MACD, and we have a negative tick on the histogram. On the weekly chart, sideways with a slight decline. That's where we're at. And on the monthly, we had a symmetrical triangle, which is a big bearish pennant breakdown. And at this moment, we have it's a lower high, lower low. And anything could happen on the monthly. Now I'm going to also bring in here Finviz. Finviz is a great website, and I like to go to groups. Go to finviz.com, go to groups. For the day Friday, let me show you this. Financials were down a huge amount. Now this is laggy. Financials were actually down more than 4%, but this is the sector group that we're looking at here. Look at this huge drop. The markets are only as strong as the financials. Friday was horrible. For the week, we had a nice bullish week. Everything's good, but financials near the bottom. Do you see this? Interesting. But for the month, look at this. Basic materials down 10%. Financials down 5.6%. For 3 months, conglomerates, financials, look at this. Huge basic materials. Last in 2008, before the markets crashed, we saw a major sell-off in commodities, and that's what we're seeing in basic materials. Big sell-off. Basic materials, big sell-off. So pay attention to that. All right, now, if you are a Stock Picks V newsletter subscriber or a 201 advanced education subscriber. Couple notes for you. Stock pick guys. It might be a few weeks and you'll continue to get the V newsletter, but you're going to get it through the email instead of logging onto the website. The website, we're not able to get that working or fixed. So we're building a brand new website. It should be up within a month. So there's a good chance in the next month, each weekend, you're going to be getting an email V newsletter with all the same information. So it's actually going to be a benefit to you. If you have any friends that want to try out the Stock Picks V newsletter, give them the promo code 2 weeks, WEEKS, all caps. It has to be capitalized, 2 weeks, and that will give them 2 weeks free of charge, and they'll be able to get access to the V newsletter. Now, for the 201 people, huge apology. The cloud server that we're using is not connecting to those videos. We have lost that ability. So on the new website, we're having to recreate that, and we're looking at those starting up in November. So I sincerely apologize, and I will gladly extend your time that you have, because you get full 12 months for those. And I know you guys love watching those videos over and over again. There's over 6.5 hours worth of advanced technical training, and so as soon as we get those back up, and if you want additional time, I will gladly extend your time. No issues there. And for those that want to be mentored by me, you have an awesome opportunity. It's a 50% discount. We're meeting live in Vegas next month. The training is November 14th, 15th, and 16th. And if you want to go, I highly recommend that you contact Carolina, like North or South Carolina, at groktrade.com and just say I want some details on that 50% discount off of a live training session. So we got a nice group going on. Looking forward to you guys joining us. Take care and very safe trading to us, and be so kind to click the like button down below there, and for you YouTube subscribers, click on subscribe. And thank you for being a part. Looking forward to seeing you guys in the chat rooms coming in next weekend.